In this video we'll talk about Relic, and first of all I would like to show you the chart, and it is extremely interesting. First of all we have a support line here, and it is a trend channel. From my point of view, it is possible to make plus 177% in this stock, and it is definitely worth of our time to research the stock. Price to sales right now 4, CAGR 20%, and in my model you can see price to sales 4 and CAGR 20%. And we can expect maybe $52 at the end of this year. Here you can see the presentation, and it's quite complicated from one side and useless from another. They have a new Relic platform for all engineers, and it is awesome. All teams, all tools, all data in one platform for one price. With the simple words, they're selling observability as a SaaS. And I really like SaaS services because you can expect really high price to sales and price to earning numbers. Platform adoption for our top 4 products. All customers, really nice trend. Customers are sending us more data than ever before, and I really like this exponential growth. Here you can see the rates at 25 cents per gigabyte. And they're expecting to adjust it. Plus, you can buy some compound products, not for $1.15 per gigabyte. Now they have some sort of promotion. Here you can see total active accounts with over $100,000 per year in revenue, and I really like that they are super stable, and you don't see a drawdown like here. They are always growing, and it is awesome because this cohort brings them 80% of revenue. Platform networks effect, engineer mindshare, and product lead growth, new customers, cohort graduation, data plus users expansion. Here you can see some competitors like Datadog and Dynatrace, and New Relic I think better because it is cheaper. Cohort graduation with customer pods lower than 50,000. It is a self-service, then grow and expand our adoption, and super good customers with over $500,000. They're getting full platform adoption. On this slide you can see a guidance for fiscal year 2023, and it is $925 million in revenue. With the simple calculations you can get 20% or something like this revenue CAGR. Here you can see that in 2021 the revenue growth rate was 11%, and now they have 18%, and it is mind-blowing because maybe in 2023 they will have maybe 25%. These income loss were quite predictable, but some analysts expect fiscal year 2024 profitability, and now they have quite high margin, over 60%. From my point of view, it is a yes to buy stock. 14,800 active customer accounts, and over 1,000 active customers accounts with $100,000 in revenue. Here you can see New Relic on Guru Focus, and it is a possible value trap. Think twice, and maybe they're right, because definitely it is a little bit risky, because they are losing money from the beginning, and maybe they will fail. But again, you can see expectation for March 2024 over $1 billion in revenue, and earning per share in a green zone, and it is awesome. I don't think that they are distressed on Altman that score, because cash $828 million and debt 558. As a resume, I think with a gross margin over 67% on a long run, they can show us something like profit margin 10, maybe 20%, and if I will use lowest number margin 10% and revenue growth rate 20%, I think it is still cheap with price to sales 3, because it will take for us 11 years to tenfold our money. If I will rebuild my model to price to sales 3, it means that this stock never traded on this level, and it's quite not realistic from my point of view. And expectations are not really nice, minus some percent, like 10% or something like this. I'm not buying this stock, but with price to sales only 6, it is quite close to my prediction. What do you think about Relic? Please write down your thoughts in the comment section below.